Hello, 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 hello. My name is Neil Matlock from Matlock Funding. Yes, I know I have not made a video in a while. I've been very busy helping out clients the last couple of months. I've had some clients get on me and say, Neil, gotta get your videos back up because, man, you got so many products. So I've been so busy, but I'm starting to realize that there's a lot of people out here in the business getting their feet wet as far as flipping houses, investment properties, construction loans built from the ground, all those great projects a lot of people have going on. And a lot of people are getting, unfortunately, some bad advice or maybe some lending institutions that are taking advantage of them. So today what I really want to touch bases on is what they call private funding. So I've been able to grow my company a lot in the last, I opened it up 4 years ago, but in the last 6 to 8 months, I've got a hold to a lot of private funding. So private funding, what that basically means is kind of like as a person that has maybe some money, a lot of money, however, I don't know what you want to consider a lot of money, but my point is that they actually would do the deal for you. So for instance, when you go get let's say you are a house flipper and you want to get into the business of flipping a house. What they don't tell you is that a lot of times it's kind of hard to get into the business because there's some banks, hard money companies, they won't actually loan you the money if you've not done like 5 houses in the last 24 months. So when I say they won't, they might, but my point is your rate would be like maybe 11, 12, 13%. They want the guy that's bought some houses, fixed them up, sold them, and then like maybe 5 of those in the last 2 years. A lot of institutions are asking for experience. Do you have 5, houses flipped in the last 24 months? If you don't, then your rate might be a little higher, or you have to put more money down. So I had to get into the ARVs and all that type of stuff, but let's just say, there's some deals that you might have to put 20% down if you are a brand new house flipper. You got a couple of years of experience, or you got a couple of houses done. They might only ask for 10% down, things along that matter. Most hard money companies will pay for everything you need to fix the house up if it comes back less than 75%. What they call ARV. And that means basically after you get done buying a house, fixing it up, if those two numbers combined come back less than what 75% what the house is going to actually sell for, then they'll be good. So if you needed me to break those down in numbers, basically, let's say you was to buy a broken down house or a house you want to fix for $100,000, okay? And you know this house will be worth $200,000 when you sell it. And let's say that you know it's only gonna cost you $40,000 to fix the house up, okay? 100 plus 40 is 140,000, okay? And that 140 total, what the house will sell for is less than 75% of what the house will sell for. So in that type of deal, you only have to put 20% down on 140. If you have experience, maybe 10% down on the 140. It's called skin in the game. So they want you to bring 10% down. Now, the thing about it is that when you have what you call private funding, that changes the ball game. It changes the ball game. And that's why I've been very busy lately with a lot of private funding loans, and to the point that I've had some of my clients get on me and say, hey, Neil, you need to tell more people about it. I'm like, yeah, I do it. And then I promised one of my clients working on a deal working on in Michigan, another great builder I've met, very positive young man out in Nashville, Tennessee. He's built a lot of houses and stuff. But anyway, I promised to them and myself that I was going to share and have a better understanding of what private funding is. So all of those scenarios I told you, private funding, you know, I got my little notes here. There's 4 major things that's different about private funding. Number one, they don't care about your experience. It could be your first house flip. They don't care about the experience. Now, somewhere in there, you want to get a builder that has built before. You definitely want to get a builder. If it's your first house flip, get a builder that's did construction work before, things like that matter. Now the builder, put you guys on some serious game. The builder, all you need to do is hope that he maybe did a couple of houses. The builder has to be willing to hold the title in his company's name during the build out process. Once you are building it out or you're doing your remodeling, then when you sell it, all the money goes to you. So it's your property, but that's a whole nother video. I'm gonna get into that. Just put y'all on some game. So they're gonna want someone that has held property in their name doing a rebuild or a build out. So you want to ask the builder, hey man, have you last couple of, year and a half, have you held a property in your company's name while you were doing the reconstruction? Trust me, the builder would know exactly, or the contractor here knows exactly what you're talking about. Trust me. It just make sure you ask that question. So, number one benefit though, like I said, is having less experience. Number two, really no experience, I'm sorry. Number two, which everyone loves, less paperwork. So, when I say less paperwork, let me just give you guys an example. I actually have a deal today that's closing in Corpus Christi, Texas. Young man I'm working with here in the Dallas land area. He's buying houses all over Texas and flipping them. He's moving and shaking. And this man, I just want to make sure I'm not exaggerating to you guys. One of my close clients, I hope you don't mind me saying his name is Johnny. I don't believe Johnny has sent me, he sent me information on other stuff. But on this particular deal, I don't think Johnny has sent over nothing but his copy of his LLC. Yeah. Just a copy of his LLC. We didn't even pull credit on this. This is what happens when you get private funding. Like, no credit, didn't check the taxes. So you're like, what's the catch? There's no catch when it comes to private funding. I'm gonna get to it. So it's less paperwork. I think the only thing he might have sent me on this particular deal, I'm thinking about his other deals, he'd send some stuff on that. But on this particular deal, because it went through private funding, yeah, I'm telling you, I don't even think he sent it to his LLC. That was it. Just want to know who the guarantor is going to be. So that was it. So number one, you have less experience. Number two, less paperwork. Number three, of course, the one everybody loves. Fast. And I do mean fast closing. He brought this deal to me Tuesday. Supposed to close yesterday, but he got a little busy, but it'll close tomorrow. And hard money loans right now, even hard money loans, are starting to slow down as far as how fast they can get them closed, because of the fact that appraisal companies are so far behind right now. It's ridiculous. It's crazy. I got a hard money deal right now. I got the guy approved on the 29th of October, and they can't even get the appraisal till the 30th of November. So he had to go hard money. He couldn't go private funding, lending, and I'll get to the reason why some deals can and some deals can't. But anyway, he's been approved since the 29th, and the appraisal won't even get done till November 30th. This is 2021, just because the video gets played next year. But my point is, it's about a 4 to 5 week wait on getting the appraisal. Yeah, so and he can't shop us, go someplace else, because everybody else is 4 or 5 weeks out. This is on hard money loans. So And this is in the Waco, Texas area. I know some people might be like, where's it at? Where's it at? It is like that everywhere. You're right. Some cities are 2-3 weeks. But yeah, this is in Waco, Texas. We're about 4 weeks behind. So, like I said, number 3 is about speed, time. We're getting these type of deals, private funding, done like within 7-10 days. You're like, well, what's the catch on appraisal? Private funding, most time they don't do appraisal. They do a BPO. So, that's a BPO costs less than appraisal too. So we do a BPO on a lot of those. Number 4 was the final last one. So you're like, what's the catch, Neil? No tax return. Just gotta be LLC. Yes, you need to be LLC. You cannot tell anybody you gotta be LLC. A lot of hard money companies, you know, it used to be 2 years. They get a little bit more lenient, saying 6 months. You want your LLC to be incorporated for private funding. Your LLC can be 1 day old. It's not a game out here. It is not a game. Your LLC can be 1 day old. Now, it depends on the private funding. I'm just saying, my contact and who I push my loans through, he's like, long day LLC. And the guarantee comes back okay. I do another video about LLCs and guarantees. I just want to talk about private funding today. So, number 4, like I said, the deal sells itself. That's your income. That's how we verify your taxes. That's how we verify who you are. My point is that if the deal makes sense, we will do it. Just be LLC. We check our areas, make sure those numbers coming back right. Boom. So with LLC is, with a private funding, basically you're dealing with someone that has money, and I send them over the deal. They say, oh, they get the house for this much. They only want this amount of money, or the house will sell for this much. They check it. If it makes sense, boom. So how much do you usually put down on private funding? Programs is coming in at 5% down. Man, you can't beat that. You can't beat that. So we come with 5% down. You know, if you go over that 75% ARV, then they might ask you to put more money down. You know, that's every scenario is different. But yeah, if the price of the house and what you need to fix it up comes back 75% less what the house is going to actually sell for, you only got to bring 5% down to the closing costs and plus your closing costs. That's it. So that's the benefit of going to private funding. It's less headache. You don't have to have as much experience. Documents, this really is almost like pretty much like a no-doc loan. There is some people's scenarios different. They see something, they might say, okay, they might ask for it. I don't know, something small. I don't know. It's very, like I said, it's very rarely they ask for anything. So I can't even think what they might add on the ones I've been doing. So it's like not to laugh, but I really can't think of anything that's been asked on any of the private funded loans. So anyway, just putting you guys in some game. Like I said, the name of my company is Matlock Funding. You guys can reach me at 214-457-5355. My email address is madlockfunding@gmail.com. It's MADLOCK funding, FUNDING @gmail.com. Making sure I give you guys all my contact. My Facebook page is Matlock Funding. My YouTube channel is Matlock Funding. So I'm gonna get back on my videos. I've been just extremely busy, man. Like I said, anybody who wants to know what I do residential loans. My loan officer, he's in California. He's a beast. I got a VA specialist loan officer. I do commercial lending. I'm licensed in all 50 states. My private funding is a little tricky. My private funders, you gotta remember this is a person with money. I got 2 guys. They pick and choose what states they want to deal with, but most of the states they will deal with if it's a good deal. And also on this private funding, I know I'm pretty sure I get some people hit me up about it. My private funder also do, wait for this, I do another video about this later. He does construction bills. My people that, my house builders and my people that flip houses, they know I'm looking like that. Imagine having private funding on a construction build out. So if you are a person that's buying a house, no, we cannot do it for you. We will only talk to the builders on a construction build. So you will only be able to talk to the builder. And if it makes sense, put up the deal. We have a deal that we're looking at right now. Tennessee, total build out for 2 houses, everything probably gonna come in like around 1.2 million. And the only thing the guy probably gonna bring to the table is 150,000 on a $1.2 million deal. Private funding. Man, God's been good to me, man. I hope God's been good to you guys too, man. I'm about to get out of here, took enough of you guys' time. I'm sorry for not making videos like I should. I've been extremely busy, but that's no excuse. I gotta give back to people this knowledge, because knowledge is very, very key. And I just want to see people make good deals, not get used. I've got a lot of people that came to me after going to another lending institution. They've been like, man, Neil, I wish I knew you first. So I got to start back giving out this free knowledge and giving out to my information, let people know where to reach me at. Even if you don't go through me, you just got questions, feel free to reach out to me. All right, I'm about to wrap it up. That's my last time saying that. Anyway, it's your boy. You guys know what I'm going to say. All right, before you go out there and find the house of your dreams, make sure you reach out to me to get the loan of your dreams. You guys have a blessed day.